Friday's job report coming in better than expected, with payrolls increasing by 303,000, unemployment ticking down to 3.8%. Joining us now to discuss that report and how it may influence the Fed's next move is former Boston Fed President Eric Rosengren. Eric, it's great to have you back on the show, and that's exactly where I'm going to start with you. It does seem like this was a little bit of a Goldilocks report because you had that strong top-line number. Wage growth, though, is basically in line with expectations, and while it's still growing year on year, the rate of growth seems to be slowing down as well. Your take?
Well, that's exactly right. I view this employment report as quite strong, but I think it's really good news for the U.S. economy. So the payroll number of 303,000 jobs makes 3 months in a row where there's been substantially more than 200,000 jobs a month. And I think that is primarily because the workforce is growing relatively quickly. And as a result, people that were expecting job growth to have to slow down significantly have turned out to be wrong. And in fact, we're getting the kind of growth that I think is roughly consistent with 2.5% growth, maybe slightly higher than what potential is. The unemployment rate ticked down by 0.1%. But I think the best news in this report was the average hourly earnings, which is a measure of kind of wages and salaries. And it was about as expected, as you said. It was 4.1%. But I think if you look at the subcategories, what's interesting is when we first came out of the pandemic, it was quite hard to get people to do many of the service jobs. That includes kind of hospitality, hotel work, restaurant work. And now employers are not having to pay significant premiums and are still able to attract significant number of people in these less skilled jobs. So what that means is there's probably not going to be as much pressure on service wages. And we're seeing that the average hourly earnings is getting in a range that's more consistent with what we'd want to see for a 2% inflation target.
Yeah, we've had so much Fed speak this week, and I want to get to that with you. But first, I have to ask one more question on this because we were discussing it with Steve Leisman yesterday. Rick Santelli has been all over it as well, and that's the role that immigration is playing in the labor data, too. Rick Santelli had Casey Mulligan on, and he pointed to part-time jobs category and the fact that so much of the gains are happening there and that there's actually less employment per person, and the role that perhaps immigration is playing in that and is playing in the wage growth trajectory that we're seeing play out as well.
I think that's right, that we were probably underestimating how quickly the U.S. population was growing because we were underestimating how many foreign-born workers were in the United States. And as a result, many of those individuals are going into hospitality, restaurant, hotel type of work, where we were seeing real shortages when we first came out of the pandemic, but we're no longer seeing shortages in part because they're filling many of those jobs.